Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, welcome to another Bitcoin video. Welcome back to YouTube again. Now, if you're not aware, I recently uploaded a video called the Bitcoin Cycle Primer, and it is essentially the 20 or so minutes I spend at the start of each of these weekly updates or bi-weekly updates for Bitcoin explaining the long-term 4-year cycle, the halving data and the long-term Elliott wave picture for Bitcoin. Now, I'm no longer including that in my weekly updates since I know some people are getting sick of listening to it and it does take up a lot of my time. So if you want to know about the long-term cycle and the long-term picture of Bitcoin, you can now go and watch that video. I will post a link to it in the description below. If you're new to Bitcoin and crypto in general, or trading, or Elliott wave analysis, or technical analysis at all, you might find the video interesting. And if you're new to this whole world, you should probably go and watch that as well. You'll probably find the information quite valuable. This video going forward will be the short-term format, looking at the short-term Elliott wave counts, and this is how I will keep it going forward from now on. So hopefully keeping the video down to 20 minutes ish, and it'll just save me time, and it'll mean that you guys get an immediate update about the short-term price action. So that's what I want to focus on today. I want to focus on everything from the low of August 24th to the recent high. We will put it into context by the end of the video, from the move off of the low of November 22, but the series of short-term time frame counts here is what I want to deal with first. The reason being is there's some expediency regarding what could happen next, so let's not waste any time. So one of the most obvious structures has occurred, and that is this head and shoulders structure here. Right, we can clearly see left shoulder, head and right shoulder. Now, if you don't know what a head and shoulders structure is, it is essentially a topping pattern. You can also have an inverted head and shoulders, which is when we have a head and shoulders at the bottom of a structure. Now, it is a common mistake when people will place these patterns in the wrong place. So, for example, I have seen people use an inverted head and shoulders structure like this at the top of a pattern, at the top of a wave. This is not where you would put it. It would occur at the bottom of a move, just as the traditional head and shoulders occurs at the top of a move. Now, why is this? Well, there's a video on the Patreon covering classical technical analysis structures, everything from cup and handle, head and shoulders, bull flags, bear flags, pennants, la-di-da-di-da, and explains them in Elliott wave. And what the head and shoulders structure is, essentially, in this context, is the wave 3, 4 and 5, and then the corrective A, B and C coming back the other way. It could also be 1, 2, 3 down if it was a larger wave degree topping out, we may come down in a 1 and a 2, 3, 4 and 5 to get a larger A, B, C. But traditionally it is basically 3, 4, 5, A, B, C. And that is what we're witnessing currently. Now it could be A, B, C, A, B, C, A, B, C, W, X, Y. It could be any number of other things as well, but generally that's what we're talking in the most simplistic terms, that we've topped out at 3, 4, 5 and now we come back in ABC, and that's what the head and shoulders structure is. Now, not all head and shoulders structures break to the downside. These kind of structures can appear as overlapping wave 4s within a larger upward trend. So you could have, for example, a 1 and a 2, a 1 and a 2, a 1 and a 2, a 1 and a 2. You have the extension in the 3, you have the 3 and a 4, and a 3 and a 4, and a 3 and a 4, and a 3 and a 4, and then you continue higher. And this overlapping series of wave 4s just happen to build this head and shoulders structure. And then this overlapping series of 1s and 2s was the beginning of that extension. So it doesn't always break to the downside. That's the explanation for when it doesn't break to the downside. You just had another overlapping wave 4 coming back to support. When it does break to the downside, you have peaked in a larger wave degree. Now that could be the 5 at the top of a 5-wave structure into an ABC, or it could be the 5 of the wave 3 of a larger structure, and then you come back as a zigzag within a larger 4. All of these are possible depending on what's happened prior. So we're in a position now where we've got this clear head and shoulder structure, we've got the probability of breaking to the downside. So now that we've identified this structure, let's have a look at the possible ways of interpreting it. So off of the low of August 2024, we have this idea, which is that we are currently in a wave 4 retracement at minute wave degree. And what that means is that we've come up in a 1 and a 2 inside of this base channel. We've placed a series of 1s and 2s within the base channel, coming up to test the resistance. We've then breached the base channel, filled in a series of subsequent wave 4s, overlapping, this 4 overlapping into this wave 4. And then this is a larger wave 4, which is coming down in a channel A, B, C, using a 1-to-1 extension as a correction, falling somewhere within the 23.6 and 38.2 Fibonacci retracements for a wave 4. That means we take the length from 2 to 3, and we expect the wave 4 to retrace between 23.6 and 38.2% of the wave 3, the Fibonacci numbers. And this will likely come down as an ABC, like this. So that's the first idea, that yes, it's a head and shoulders, but it's not the 5 of a 5 up here, it's the 5 of a 3, and there we're coming down in the 4. This is a pretty sound idea, based on the idea that it's also supported by there being an example of alternation. So we have a sideways structure here in the wave 2, and then we are presented with a sharp structure here in the wave 4. And this means we've had the classic Elliott wave alternation between sideways and sharp, or sharp and sideways between the 2 and the 4 at the same wave degree. So it's, for the moment, a strong possibility that this is correct. Right, we will wait and see. Now, we can often come back to the base channel in the wave 4. And the top of the base channel is not far from the 38.2 and not far from the 1-to-1 extension and not far from this channel. So this is a reasonable area for it to come back. Now, in the bigger picture, if it were to come down through the 38.2, back into the base channel and head even deeper, back towards these overlapping wave 2s, the probability of this then being a wave 4 is less and less likely. Okay, it's going beyond the typical targets. So for as long as it remains within this channel, for as long as it remains within this range, then it's a viable wave 4. If it gets more aggressive, it is not invalid yet, as it doesn't invalidate, believe it or not, until it transgresses back into the top of wave 1, which is all the way back here. But I think we could safely say it absolutely 100% was not a wave 4 by the time we got down here. Alright, so it's kind of useless, that invalidation point at this wave degree, at this scale. I would argue that if we breach for 38.2, we come back into the base channel, we go past the 1-to-1 extension, and we break the corrective channel, they are all signs that it's something other than a wave 4. Not a guarantee, just all signs that it's something other than a wave 4. So that's the first count. Right, we've come up in a wave 1 and a 2 at minute degree, and then 1, 2, 3, 4, 5 at minuet degree, and we are now in minute wave 4. So let's have a look at the next idea. The next idea is that this head and shoulder structure is the peak of a larger wave degree, and it's not 1, 2 at minute, then 1, 2, 3, 4, 5 at minuet. It is 1, 2, 3, 4, 5 at minuet into minute 1, meaning that this isn't a wave 4, this is a wave 2. And the wave 2 is traditionally deeper, not always, but it shows up as a sharp structure more often than it shows up as a flat structure, or a sideways structure as we call it. So if this head and shoulders breaks down, we could be expecting a deeper retracement. And a typical target for a wave 2 would be between the 50 and the 61.8% retracements. The 50% is just a psychological target, the half price target that all humanity has in common. We all know the value of 50% off. Alright, but the 61.8% is the Fibonacci golden ratio, and it tends to pull things back like a magnet. If you keep heading towards it, it tends to get stronger until you reach it. Now, we've also got down here very strong horizontal support. Previous highs back around March, and then we have a whole series of highs in that region which were tested and then back tested again in October. And this is the $73,460 level. $73,460. Now we don't have to come this deep, okay, but if we breach this head and shoulder structure, we breach the base channel, we go through the 50, there doesn't appear to be any reason why we wouldn't want to come back and test an obvious support level. So essentially, if we've had 5 waves up at this wave degree and we've completed another wave 1 and we are indeed in a wave 2, a deeper retracement than the wave 4 we were talking about is more likely. So there's your second idea. So this could be a bigger sell-off. Now how could you approach this? So if we are coming down now in a wave C, we've already done the A, we've done the B, and now this will form a 5-wave structure. It could be a diagonal, but it's more likely, if it's coming to a deeper target, it's more likely going to be an impulse. So for example, at some point we will either bounce off of the neckline to put in our wave 2, or we will breach the neckline and come back above it. This is called, well, there's multiple nicknames for this, bait and switch, I'll fuck both of you. It's the kind of like grab liquidity, fuck the sellers, then fuck the buyers, and then fuck everyone. And it's just the shorting opportunity you should actually wait for. Now, what I mean by that is the stupid thing is to short the breakout. Okay, because if we break through the neckline, we've already done a fair bit of selling off, right? We've already gained some pretty big bearishness, and we're likely going to run into oversold conditions. So sooner or later, we're going to come either through here to either back test this level, or we're going to bounce off of this level to come higher, or we're going to climb back up as a 3-wave structure, doing both. That will be the level you want to short from. We move down, we retrace. This is 1, this is 2, you short the 3. That's if you're trading it, right? Then you can set up a margin of error, a margin of safety for your stop loss between the entry level and the prior high of the B wave. It could be 6%, 5%, 7%. I'm not telling you how to trade. You trade however the hell you want. I'm just saying that's how I would set it up. We call that standard trade setup the STS, which is you look for an impulse down, you look for 5 waves up or 5 waves down, 3 waves back. Then from there you set up the trade because you've reduced. We want to be retracement traders, not breakout traders. Breakout traders are suckers. Okay, so we come down here, 5 waves, and that's where we get the wave 2. So there's 2 counts. Let's move on. So before you start saying, oh, he's got loads of counts again, let's just be clear. 2 of these call for lows for us to move lower from here. So that's 1 count really. How severe it gets, that's up for debate. So then we've got another one now, which is very, very close to being invalidated. Very, very close to being invalidated. That's the idea that we've already had a 3-wave structure completed within a minute wave 4, and we are now moving higher. The likelihood is, looking at the price action, if we're lucky, this will be invalidated by the time you're watching it on YouTube. The level we need to clear is 91315. If we break through that, we've broken this idea, and therefore we can stick to the other counts and expect lower pricing from here. We might still get that retracement up for the short term, but we can expect lower pricing for the correction to complete. If, however, we bounce from here violently and we start making some serious progress higher, then there is the outside possibility that I mentioned earlier that this was another series of overlapping wave 4s, and now we're thrusting up into that 5, and this is how it would look. 1 into 2 at minute degree, Elliott wave channel from the copy of 2 placed on 4 projected from the 3. We can see that we've already breached that Elliott wave channel that was based on the copy of 2 to 4 from 3, and it does not look like a very good start. It's an extremely deep wave 2, and it doesn't appear to have a zigzag. It appears to just be a strong impulse lower. It is not impossible though, so we have to see if we rally from here. If we do rally before that invalidation point, we could be entering a wave 3. Now if we break through that invalidation point, this count is immediately wrong. And that's all you really need to know about this. So let's recap quickly the short-term counts. Number 1. 1, 2, 3, we're in the wave 4. We're expecting the C leg of the wave 4 to come down and to finish somewhere between the 23.6 and 38.2% retracement within this corrective channel, probably close to the 1-to-1 extension of A projected from B, into that target zone. We've got a nice strong target zone. We've got the edge of the base channel, which is a typical pullback zone for a wave 4. We've got the 2 Fibonacci numbers, which are typical areas for a wave 4 pullback. So we will just put target box in here, and we've got the channel, and we've got the ABC 1-to-1. So it's all in here, likely area for us to stop. And we're going to add that to there. The next one is it's all the wave 2, and this is A, and this is B, and this is C. The target box from wave 4 is still valid. It could be a shallow wave 2 stopping back at the base channel, but it could also be a deeper wave 2, and therefore that target box, which I think I put in the wrong thing. Where is it? I put it in the head and shoulder structure. Should not have done that. STF1. The target box, instead of being here, would likely be lower, somewhere between the 50 and the 61.8 back inside of the base channel. Now it could go deeper to 78.6 or even 89%, but the first target we would have is down here, back on this major support, back on the 61.8, between the 50 and 61.8, back at major support within that initial base channel. That's a very logical place for it to stop. Okay, and if we were to take the fixed range volume profile off of the low to the high, we can see that we just start to enter all of that volume down here. We get that little gulf around the 50. Then as we start to come into all this prior structure, we can see how the likelihood of gaining support here increases. And if we bring on the VRVP, we can see just how strong the edge of that volume node is. That becomes like a big shelf sitting underneath the golden zone, and as we come back into here, that's where we're likely to find support, back at the edge of all this structure. Okay, and there's your second idea for the short term. Finally, and we're just going to put that into STF2. This is the final one. 1, 2, 3, 4 is done. 1, 2 again. Highly likely to still be valid by the time you watch this. Go through 9, 1, 3, 1, 5, and you can take your pick between 1 and 2. And it's purely a case of how price develops from that point. Okay. Remember, there is the possibility that once we breach the low of the neckline of the head and shoulders, we have a liquidity grab into this little bit of support down here. And then we grab all the shorters who are shorting the breakout and we drag them back into their stop losses to squeeze them out. Then we grab in the people longing it. Then we fuck them as well. That would be the most typical like free wave swing to hurt as many people as possible. And the market sure as hell does like to hurt as many people as possible. So we don't short the breakout. We wait for a retracement if we want to be bearish. If we want to be bullish, we look for 5 up and 3 back, and we set up the same stop loss at support at the prior low so that we don't get wrecked going that way either. And that's how we'd have to approach the trade. Alright then, that is the short time frame. That's how I see things, our options since putting in this structure at the top here. Alright then guys, thank you very much for joining me on this technical analysis video of Bitcoin. If you're new to the channel, you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you want to learn all of this stuff for yourself, Elliott Wave and everything else, and get exclusive videos each week, live streams, a bunch of other educational content and access to a public Discord, you can sign up to my Patreon for just 10 quid a month. You can cancel at any time, access all that information, and yeah, feel free to sign up right now. And if you're not following me on Twitter, you can follow me there as well. I occasionally remember to post video updates on there. In the meantime, take care of yourselves, and I'll be back with you as soon as I can. All the best. Bye bye.